Hello traders, welcome to a new video here on the channel. So today I thought I would make a special video talking about a concept that I have never touched on here on my YouTube channel. It is something that I use every day in my day trading, and while I talk about this in my day trading course as well, but I thought I would make a basic introduction to the footprint charts here for YouTube, since I know a lot of people now are very interested in order flow trading. And so this is one of the best tools that you can use for order flow trading. This is a very, in-depth topic. We could be talking for hours and hours about all the different kinds of footprint charts or the settings you can use. I'm just want to try to keep this video very brief, just to give everyone an explanation of what a footprint chart is, what it tells us, how we can read it, and then briefly show you an example on a replay of a live chart in the E-mini SP500 futures of how we can use footprint chart just to identify things that would not be evident simply by looking at a regular candlestick chart. Okay, so before we dive right in, make sure to subscribe, hit the thumbs up button. Any questions or comments, leave them below, and make sure to get notifications for new videos coming out every week. I also have a lot of videos back in my catalog, so if you're a newer viewer, make sure to check out my playlists, because I have over 100 educational videos uploaded already in English and Spanish. Okay, so let's dive right in. So before we touch on the footprint chart, let's briefly talk about the DOM, or the depth of market, because this is going to help us understand the concept of footprint charts better. So the DOM, or the depth of market, if you're not familiar with this, basically shows us every level on the price scale of an instrument. In this case, this is the ES or MES, the mini or the micro futures for the S&P 500. I think this is an ES, the screenshot that I took, but pretty much they're pretty similar. The ES has a little bit more volume, but anyways, so this is a futures S&P 500 DOM, depth of market, or it is sometimes also called level 2 data. So what we have here, as you know, the ES moves in ticks. Every tick is equal to 0.25. So 4 ticks are going to make 1 point in the ES market. And so basically this chart, what this tells us right here, these are resting orders. So basically this is limit orders. This is limit orders to sell, or is what we call the ask, and then this is limit orders to buy, or what we call the bid. This is called ask. Sometimes they also refer to this as the offer. So ask or offer are the same thing, and they're basically limit orders to sell, and then the bid are limit orders to buy. And so the bid, it's always on the left side, the buy orders are always on the left, and the sell orders are always on the right. And as you can see right here, this is where price is at the moment, this number that is highlighted. This is from Sierra Charts, by the way. This is the software that I use for day trading futures. So this is screenshot is from Sierra Charts. And obviously, I mean, you can customize all these things to whatever colors you want, etc. This is the most basic way to look at a DOM. There's DOMs that are a lot more complex with a lot more columns, just such as like Jigsaw trading, for example. The Jigsaw platform has a very complete DOM. You can also recreate it on Sierra Charts, NinjaTrader, etc. So you can show other types of executions, but just to keep it brief, pretty much the DOM is only showing us the basic of limit orders to buy and to sell. So what does this mean? If the market was only comprised of passive buyers or sellers, of passive participants, the market would not move, because as you can see right here, we have 32 orders, 32 limit orders to sell at 46, 46, 75. Then we have 30 orders to sell at 46, 47, etc. Now, I'm not going to dive into this, but there's other concepts like iceberg orders, which is orders to sell or buy that are hidden, that are not reflected here, etc. But for the most part, the DOM has a pretty good reflection of the orders, especially in markets like futures, which are centralized. All the orders are coming in from the CME in the US, for example, in the index like ES, NASDAQ, etc. So definitely index futures of equity markets are one of the best and most liquid markets that you can trade on this. In Europe, the DAX, for example, would be another popular market that is really good to use with a DOM and footprint charts. For cryptocurrencies, this can be applied to maybe Bitcoin and maybe Ethereum. But the thing with crypto is, as you know, it's decentralized. You have a bunch of different exchanges, so you have unique volumes for each exchange. But as long as you stick to a pretty big market like Bitcoin, for example, in an exchange like, FTX, BitMEX, Binance, just exchanges with very high volumes, you can get some reliable order flow volumes to trade out of. So in this case, we're going to focus mostly just on the ES futures for the CME for this video. So as I was saying, this is just orders, limits to sell, and this is limits to buy. So these are resting orders from passive market participants. So the only way markets move is if we have aggressive buyers or sellers. These people are basically just trying to get filled at whatever price is available at that moment. And until you get a lot of enough orders to buy or to sell aggressively, then markets are not going to move. So for example, you can see here right now at 46, 46.50, you have 3 resting orders at this level on the bid. So that means if we get 4 or more aggressive orders to sell at this moment, these 3 resting orders to buy are going to be consumed, and then the market is going to go down 1 level into the next price level here, and then now we're going to have 30 limit orders to sell, and then once it moves down here, then we would get new limit orders loading up here to sell, and 30 orders here to buy, etc. Now, if you watch the DOM in action, obviously this is moving all the time. There's orders being added and subtracted on both sides continuously, especially if there's a lot of volatility and activity. So these numbers are constantly changing. Some people can trade exclusively just by watching the DOM, how numbers go up and down, how levels are reloaded, taken down, big orders resting, etc. I don't trade exclusively off of the DOM. I mostly just use it to spot levels, for example, like here, where you have, significantly more orders than the rest of the levels. So then you can assume these are levels that have, more interest. In this case, you can see this is a big round number, which usually are levels that always have also more interest, etc., with resting orders at those levels. Okay, but basically the whole premise for this summary with DOM is just to show you that the DOM shows us resting limit orders to sell on the right side and resting limit orders to buy on the left side. And when we read a DOM, we're going to read it, like we said, diagonally. So in this case, we can see that in order for price to go up one level, we need at least 32 aggressive market orders to buy in order to consume this 32 orders resting here to sell, because as you know, for every buyer there is a seller, and for every seller there is a buyer. So you need interaction between both. You need aggressive buyers to consume selling orders, and you need aggressive sellers to consume buying orders. Okay, so basically we read them diagonally. Like in this case, we would be reading them like this. And like we said, if we are right here, then aggressive buyers are going to be what we call lifting the offer, meaning they are going at market and getting filled at the next available, the next best order to sell into their order. And when you have aggressive sellers, they're going to say what we call hitting the bid, meaning they are aggressively selling down into the next available best orders to buy their selling orders. Okay, so that's pretty much it for the DOM. I just wanted to go over the concept of passive and aggressive buyers and sellers and just get an idea of how this basically shows us passive buyers and sellers. Now the footprint chart, let's move here into this area now, and let's just start talking specifically about footprint charts now. Okay, so a footprint chart, we can make any type of footprint charts. You know, we can make footprint charts out of minute-based bars. We can make footprints out of tick bars, out of range bars, etc. In this example, I just have a basic candlestick chart on the left side right here. And then on the right side, we have right here the footprint chart for this candle that we have right here with this arrow. So as you can see, a footprint chart gives us an insight. Basically, it's like taking an X-ray into a candlestick, and you can see exactly what orders were executed at each price level in that candlestick. So you can see in this candlestick, we have a high, which is right here. We have the candle open, which is right here. Candle close, which is here. And the low of the candle, which is right here. So the footprint chart is just a more detailed way of looking at in this case, at a candlestick chart. Both are 5 minutes of trading action in the ES, the SP 500 futures market from the CME. Okay, so now the footprint chart, and this is something that sort of confuses people when they start out, because they see the DOM and they see the footprint and they say, oh, okay, so these are resting orders to buy, these are resting orders to sell. So that means these are buy orders and these are sell orders. Well, no, the footprint chart, what it shows us is actually executed trades. So while the DOM is showing us passive buyers and sellers, the footprint is showing us aggressive or active buyers and sellers. Basically, what we are looking at in the footprint chart is actual executed orders at each level. Now, there's different ways to represent a footprint chart, but the most popular way would be the bid and the ask footprint. So this is a bid and versus ask footprint. So what this footprint is showing us is basically on the left side we have how many trades, in this case this is the number of contracts or lots that were aggressively sold. So on the left side we have sellers, and on the right side we have buyers. And remember, this is executed orders, so this is orders that have just happened. So one of the advantages of order flow trading is that you're getting immediate data, unlike using, for example, indicators, which are basically processing data that's already in the past. When you're using footprint charts, and we're going to see this when we go into the example on Sierra chart that I'm going to show you, where we're going to replay a chart so you can see how it's occurring, everything inside of the footprint chart live as the chart is moving. With order flow, you're watching things exactly as they are happening right now. You're watching all the volumes going in, so you're looking at the intent of buyers and sellers, the size that's going through, the aggressiveness, etc. And this is all very helpful if you are day trading, especially because order flow is mostly applicable for lower time frames where you can really look to capitalize on short-term divergences and momentum plays, etc. Okay, so if we take, for example, the top of this candle, this top wick, what do we have here? We have a 0 and we have a 38. This is the bid and the ask. So what does this tell us? This tells us that at the top of this candle we have 38 aggressive buyers, meaning there was 38 contracts executed were bought up here. So if you remember the DOM, you would have the two columns here. So there was 38 contracts were executed, meaning 38 contracts for a limit sell order were bought right up here, and 0 contracts were aggressively sold up here. Okay, if we go down to the next level, then you can see it's 24 and 83. So that means in this level we had 24 aggressive sellers, 24 contracts executed to sell, and 83 contracts executed to buy at this level. Okay, and if you just add up both of these numbers at each level, that is just going to give you the total number of contracts that were executed at this specific price. And I'll show you in a second on Sierra chart how there's different ways you can show your footprint. But like I said, this format right here, which we have, which is the bid by the ask, this is the most popular format probably that there is. Okay, and so as you can see, you just get a lot more detail what's going on in this candlestick, as opposed to just, looking at a solid candlestick like this. You can see the candlestick, but you don't know what exact level within this candle was the most volumes traded, etc. And also, as you're going to see later, you can even apply a volume profile within the individual candle, where you're going to have, obviously where areas have more volume, that's going to create high volume nodes, mini high volume nodes within the candle, etc. Okay, but pretty much the footprint then shows us this. And now let's go into the anatomy of a footprint chart and what every number is. So I have this all laid out here. So in the footprint charts, there's a concept that is very popular that is called imbalances. So the concept of imbalances okay, so imbalances basically means that you have a lot more aggressive buyers versus sellers, but you're measuring it diagonally. Just like in a footprint and the DOM, you compare them diagonally. And so, for example, if you compare these two numbers here, this is a big buying imbalance, because that means at this level we had 166 contracts executed to buy, and there was 0 to sell on this side. Here you had 226 contracts to buy and 0 down here, etc. Okay, so imbalances, as I'll show you later, just helps you to read how aggressive the momentum is between buyers and sellers at different levels. And there's another concept called stacked imbalances, where you have many levels of more aggressive buying and selling, as we're going to see later. But for now, just remember that imbalances, you're going to read them diagonally. Okay, then as we said, left side we have executed market orders to sell, and on the right side we have executed market orders to buy. Now, just like in a volume profile, whatever level within the candle had the most volume traded, and remember the volume, we measure it just each level, left and right. So this is total orders to sell and total orders to buy, and whichever number adds up to the most number of contracts, just like in a volume profile, that's going to be the point of control, because that's the level with the highest interest of traded activity within this. And now, if we want to calculate the volume, like I said, you just add the numbers. So for example, this level we have highlighted here, if you add them, you know that you had 2001 lots of volume traded at this price level specifically. And again, this is the ES market that we're talking about. And now there's another concept. I'm not going to dig in deep into this in this video, because that will go on a whole other tangent. But there's a concept called delta, and what delta means is basically just the difference between buyers and sellers. So if we have a positive delta, which we have right here at this level, because obviously if the right column is higher than the left column, that means there was more aggressive buying executed, and vice versa. So in this case, at this level, we had 2001 lots traded, 792 sells went through, and 1,209 buys went through. So that would give us a delta. Delta is the difference between buyers and sellers executed at each level, aggressive buying and selling, in other words. And so in this case, we have a positive delta of $417. And delta is very useful. It's also something that I use in my day trading, and I go over in my day trading course, etc. But basically, delta just helps us to identify the aggressiveness or the momentum of buyers and sellers at any moment. Okay, so that's pretty much the basic anatomy of a footprint chart. Executed orders to sell, executed orders to buy, each level would be each price level. And then, like we said, we have imbalances that we measure diagonally from bottom left to top right. By default, most trading platforms are going to highlight imbalances of 300% or higher, but that's totally customizable. You can set it to whatever you want. So that means it's going to mark an imbalance if there's a difference of over 300% between the diagonal numbers that were executed. And there's also another concept which I'm not going to go super deep into, but this is Sierra chart. And so right here we have, this is a tick chart. So basically each candle is made up of 2,000 executed trades. It's not individual volumes, it's just number of trades. So every 2,000 trades that go through, regardless of volume, it makes up a new candlestick. I really like using tick charts for intraday trading. I do also use, a 1 minute or a 5 minute chart as well. But for this example, I'm just going to show a 2,000 tick chart. And so as you can see here, let's go into this. I'm just going to make this bigger. So this is a footprint chart of this same chart here. So you can see, for example, this candle right here is this candle right here. And so, as you can see, normally on most of these candles, if we go down here, you're going to have a 0 at the top and the bottom of the candles. That basically means that auction has been finished. So a finish option basically means that there's simply no more supply or demand in the market. So for example, here we have a finished auction. Here, this is what we call unfinished auction, when we have at the top of a candlestick, we still have some orders executed at the bid. And then on the bottom, for example, this is an unfinished auction at the bottom because we still have contracts left here. So normally when a auction is set to be finished, it means that we have zeros on the ask on the bottoms of candlesticks, and we have zeros on the bids at the top of candlesticks. When there's an imbalance, then it is said that it is unfinished auction, and then people expect price to retrace back and trade through that level to finish the auction, and then you will get a 0, etc. It is not always necessary that the candle has to go right back to do that, and it depends on what type of candle. If you're using a minute candle, range, it's all going to vary. But I just wanted to touch quickly on that concept because that is something that you're going to hear mentioned every once in a while regarding unfinished auction at the extremes of footprint candles. Okay, so in this chart here, you can see I have imbalances marked right here. This is in Sierra chart, and what I have it said is all these numbers you see in green, these are imbalances. Remember, we measured them diagonally, so all these numbers here are basically diagonal imbalances where the ask is at least 300% lighter, higher than the bid. So, for example, here we have 3 stacked imbalances, bullish imbalances. So that means that there was a lot of momentum in this candle, and there was a lot more aggressive buyer than sellers here. Okay, and then on the same side, you can obviously see from the chart that this has been a very aggressive move down right here. And so you can see as well, coming down, for example, on this candle right here, which is this candle right here, you can see we have a lot more bearish imbalances than bullish. And that just shows the momentum and the aggressiveness of the move. I personally don't really use imbalances a lot in my trading because, as I'm going to show you, I like to use a different type of footprint chart, and that is this one right here, which is a footprint chart, but instead of a bid and an ask, what I have here is volumes on the left and delta on the right. So what I have here is simply the total number of contracts that were traded at these levels, either to buy or to sell, and then the delta on the right side. So I have the total volume, and I basically have here the outcome of whether it was buyers or sellers that won. So like in this case, if you look at this here, we have 537 contracts executed at this price of 3686.50, and out of that we had 181 minus 181 delta. So that means that the sellers won by a volume of 181 at this price level. We take the buyers minus the sellers, and we had a lot more sellers than buyers right here, etc., for every level. Now, is there one that it's a lot better than the other? That's all subjective. It depends, what trading you want to do, what you're used to. Every trader is unique. You just got to look at what clicks for you. And also, another thing with footprint charts, as you can see here, I have things on the backgrounds. So this is, like I said, this is Sierra chart. If I go here to the settings of this chart, candle numbers, and again, this whole template here, this is the template that I used to record and just to show my the Orderflow course, and all the students of mine get this chart after 15 days of signing up as well. And so you can see here, column 1, background coloring method. So background type, I have it set as volume profile. So that's where you can see each candle has its own little volume profile. And the coloring method, I have it based on dominant. Based on dominant, ask volume, bid volume, actual difference. So that basically means that as the background for this candlesticks, I have a volume profile, and it shows me in red if there was more selling at this level, and in blue if there was more buying. And then you can also see that each candle has a black box, and that will be the point of control of each candlestick in this case. Okay, but anyway, I don't want to go too deep into this and confuse you guys, but I'm just saying there's a lot of different tools that you can use to highlight things to just make it a lot easier and more efficient when you're using footprint charts. Down here at the bottom, on the volume versus delta footprint that I have here, what you can see in this case is This backgrounds that I have is just based on the actual volume traded. So I have it set that if I get a blue highlight, it's low volumes, a purple is medium, and orange is high volumes. Okay? And again, this is based on my settings. I can change the numbers on all this so the highlights are different, but this is just an easier way for me to know in this case where there's high volumes of activity. And I'll show you now. Let's replay this chart. This is all going to start playing, and I'm just going to show you how price is going to come into this high volume node here. This is an intraday chart again, 2000 tick. This is right around 3 p.m. So about an hour before the cash close of the futures market. We have the point of control here, so you know that this is the price with the most volume traded for the whole day in this, well, for this specific session, for the regular hour session. And you can see right here, we had a lot of volume traded here before we took off, came back and bounced. We have our low volume node here, which, as I've shown you in all my videos that I talk about volume profile, I like to get in on trades, especially at the edges of high volume nodes where we have cuts in volumes, but also points of control act as magnets for price, because this is areas with a lot of interest in traded volume, and this also can act to deflect price. And we also have VWAP here, which is another highly important indicator when trading with order flow. So now I'm just going to play this. Charts are moving, and you can see this is a bid and ask. This is the bid and ask footprint, and this is the volume versus delta footprint. All this are executed trades. You can see we have some selling imbalances forming all over here. You can see market is coming down very aggressively. And now I want you to just pay attention to how volumes are going to increase once we get close to VWAP and to the point of control here. And this is why footprint charts are very useful for me, because when you're trading, you want to really identify and see where high volumes are being executed. Because, just let me pause this for a second, you know, when you have price, let me just make this a white screen. If you have price trending very aggressively, you know, it is trending because in this case, obviously there's a lot more selling than buying going on, a lot more aggressive selling happening. But once you get reversals, it is always because price is hitting, in this case, it would hit a support level. What is the support level? Well, this is a level where there is a lot of resting limit orders where price is coming down. Aggressive sellers are trying to sell into here, and there's limit orders that are getting loaded with all this sellers happening here. And once a very large limit order is set, or we have a very aggressive buyer with a lot of size that just buys aggressively here, the market is going to bounce. And what you're going to be able to see on footprint a lot of the times here is you have a lot of high volumes to sell down near a support level. What that means is traders were aggressively trying to push this down further, and they were getting absorbed by large traders that were loading up orders to buy. So with footprint, for me, the most useful thing with footprint is to identify absorption, because absorption is when you can identify when people, big players, are defending levels, which in turn become support and resistances. And then that's going to show you where prices can be reversing, and then we can be, in this case, you're going to see, let's play this again. Remember, orange highlights are high volumes on this case, and then also here you can see by the volume profile on the candles and by the imbalances and the total number of executed. So you see we hit VWAP and we have some high volumes coming around VWAP, but now we're coming into the point of control. And look at the footprint now once we are around this area here of high volume activity. Okay, now you can see here, look, we're starting to get high volumes here highlighted. And you can just compare it here, how much volumes we had at the extremes here versus how much we're getting right here. We're coming here. Now market is gonna touch the point of control here at the orange line. So I'm just expanding this because I know it looks very scrunched up, but I just gotta fit everything on the screen. Okay, we just touched the point of control. I'm just gonna speed this up a little bit. Okay, let me just pause this for a second. And so here, see, this is the usefulness, what I find very useful with the footprint. Just by looking at the candlestick charts, we can see obviously we're coming in a big retracement, but we're coming basically into an area of demand. This is basically a demand block here. It was the last move down, or an area of demand, bullish order block, whatever you want to call it. Basically we have compression here, lots of volumes, then price took off aggressively. We left a gap here which was closed right here. We still have a smaller gap area here, and now we came back right into the area with the highest volumes traded for the session. And you can see here on the bid and ask, we were looking at a lot of selling imbalances, and now we have no more selling imbalances. Now we're actually getting a few buying imbalances here. And also you can see here, in this case, we have a bullish candle going up, and we have, in this case, negative delta right at the bottom. This is basically 182 sellers were trying to executed 182 orders to sell. So people were just trying to sell this aggressively to keep going down, and they were all absorbed. The market bounced, and now all the people that sold down here, and especially you can even see you have points of control here, high volumes of trading activity, and price has already left this area. Now everyone that tried to sell down here is underwater at the moment because price went up and now they are in the red. If we look at the volume versus delta footprint here, you can see again, look at all this cluster of high volume. If you compare this here, if I just move up on this chart, you can see the numbers of volumes coming down. Over here, this was like, we had some large volumes, some large, but then once we get down to this area, you can see we're getting numbers like 537, 682. This is a lot higher than any volumes we had previously. So now we also have all these negative deltas, meaning there was more aggressive selling than buying right at this level down here at the lows of the candles. This is trapped late sellers, people that were thinking this was just going to keep going down, and they all got trapped at the bottom here. And now with these areas, once you identify high volumes, then this is when you can see price is probably gonna either chop up for a while before deciding on a continuation or reversal. And so this is where markets sort of start stopping. You know, once you come into an area with high volumes, you know the market is gonna stall at those levels. And now you want to identify signs that this could be a reversal. And then, like I said, this is where you can then use footprint to identify where there is high volumes, in this case of trapped traders. You can also see here we have an unfinished auction at the bottom of this bid by ask footprint. So now let's just keep playing this chart. Let's see what happens. Okay, see price is coming down again. So like I said, as soon as very high volumes come in, this is where price starts chopping. So like if you were in a short here and you start watching this happening, this is where you want to cut. Like just get out, because this means that this is going to chop or reverse. Okay, you can see we came down and we repaired, and now we have a finished auction at the bottom here. Okay, and now, well, let's just keep playing this to see what happens, and then I'll just go over each footprint on its own. Let me just accelerate this more. Okay, and then as you can see, well, I don't want to keep playing this too long, but there. So basically you can see we had a very nice reversal of the point of control of the session. And again, this is sort of late in the day, so we already had, you know, most of the trading, the regular trading hours, develop volumes and profiles intraday, etc. We had volumes developing, and we knew this was a important high volume node with the point of control. And so now let's just go see each one. So let's analyze the footprint here on the bid and the ask. And then you can see right here, like I said, we came down. Once we got into the point of control here, we started getting big numbers. Like right here, you can see 410 by 272, 209 by 136, 182 by 108, 127 by 222. So you can see a lot more volumes than what we saw on previous candles. Also, we can notice that all this selling imbalances, and then suddenly we come into the point of control. We had one more selling imbalance. Price goes up, then we come down, and usually price will come to retest a high volume area before taking off. So when I trade, another thing I like to do is, if I would get in here and go long, I want to put my stop loss just beyond areas with high volumes. Basically, I want to identify where there's high volumes coming in, and I want to put my stop loss behind those volumes, because now I identified that right here, and you can see it just from over here as well, this is an area with a lot of buying interest. So this is a level that we expect big players to try to defend. The bulls are going to try to defend this area. And then you can see right here, we came down, we finished the auction here. And then, I mean, look at this move. Look at all the stacked buying imbalances that we're getting in these candles. This is just a very quick and aggressive move back from this level, okay? And Footprint helped us identify this by looking at the imbalances, and also just by looking at high volumes of being traded right at the lows of these candles in an important area. And then let's just analyze the volume by delta footprint, which again, we're looking at the exact same data, but just interpreting in a different way. There's no right or wrong. You're just going to use what, you know, it's easier for you to interpret and give you actionable signals. So in this case, you can see I have here overlaid this same high volume node here with the point of control. And as soon as we came to this level, we have big clusters of volume here highlighted in orange and in purple. We have a lot of late and trapped aggressive selling happening at the bottom here. And then in this case, you know, price just shoots up, and now you can see right here is just overall a lot more buyers just pushing this very aggressively going up. And same thing here, you can see here on this move. This moved really fast because we didn't have really a lot of volumes here. There was no friction to the upside. Once we get here, we do have a little stall right here, which would be, that was a terrible line. This stall in volumes came right at this area, right at the edge of this other high volume node where we had the cuts in volumes. That's where we got this high volumes coming in this case more selling. It pulled back, but then it just came back right away and just cleaning the whole order book to the upside with aggressive buying. Okay, so I know this video actually went a little longer than I expected, but you know, I just wanted to really go deep into this. I hope by now you have a good idea of just, you know, the basic concept of what a footprint chart is, what it tells us. So just to summarize everything again, a footprint chart, we can put many different kinds. It can be minute based, ticks, volume based, ranges, etc. But what it tells us is executed orders to sell on the left side, so aggressive sellers, executed orders to buy on the right side, so aggressive buyers. And it basically gives us like an x-ray of, just a regular candlestick. So then we can see the order flow, the actual volumes that are being traded in real time. So that's really going to be useful when you're trading, like we said, especially in the futures markets, such as SP 500, NASDAQ, or in Europe, like the Bund, the Euro stocks, etc. For Forex, this doesn't work very well. We do have futures of Forex, but just the volumes are pretty low. Most of the volume in Forex traded is OTC, over the counter, is decentralized. There's not a real measure of it since you have exchanges everywhere, etc. And it's OTC with central banks and stuff. So Forex is not very reliable. Crypto, you can do this with the largest instruments if you're looking at data from a big exchange, and you can use a platform such as ExoCharts to look at footprints for crypto markets. As far as the other ones, you can use Sierra Chart, Ninja, Jigsaw. There's a lot of really great platforms. MotiveWave. TradingView, unfortunately, does not have footprint charts. That's one of the things that they still haven't really integrated. So you cannot use footprint charts on TradingView as of now. But yeah, I mean, that's pretty much the whole concept of the video. I hope it has been useful to you. And again, this is just touching on the very general points in this. This is a very very wide topic that you can talk for hours about it. Many different strategies to use in this. I talk about some of them in my day trading course, which you can check out through my website. And again, if you haven't done so, make sure to subscribe, hit the thumbs up, yeah, hope you all have a good weekend, and I will see you all in the next video. Take care.